What interest rates are annuities paying? That's the question of the day. That's the reason you clicked the button to watch the video. And I don't blame you. Hey, that's a good question. It's just tough to answer because there's no generic answer. You just have to be a little bit more specific about the annuity type. Hi, I am Stan The Annuity Man, America's annuity agent, licensed in all 50 states, including yours. And it might be a state that you actually know what a Waffle House is. If you're like, what's that, Mason-Dixon line? If you're like east of the Mason-Dixon line, Waffle House is a 24-hour, 7-day-a-week, 365-day, never closes place to eat. Now, if you're a trucker or someone that travels a lot, you know exactly what I'm talking about. So somebody sent me this. I was wearing a Waffle House t-shirt, I don't know, a while back, and it was on a video, and somebody sent me this. You can send me your t-shirt, I'll promote you. You know, if you want me to put something, it's gotta be mellow, can't be risque, but go to theannuityman.com, XXL. But hey, here's what it says on the back: scattered, smothered, and covered. So what does that mean? Stan The Annuity Man, soothsayer of all things annuity, the annuity whisperer, America's annuity agent. It has to do with hash browns, actually. So it's, you know, scattered, I think, is scattered, smothered, and covered means you got mushrooms and onions and cheese on it, and they just kind of whizzed it around. But it's the best hash brown meal of all time. Seriously, I know it's Waffle House, but I'm just down. I digress. We're going to talk about interest rates. We're going to get down and dirty on specific types of annuities, how interest rates affect them. But one thing you have to understand is there's not some broad answer about interest rates. It really comes down to what you're trying to achieve and the annuity type that contractually provides the highest guarantee for your specific situation. So let's get to the music real quick, and I'll be right back. Hey, before I forget, before we get into the beautiful, wonderful, interesting topic of interest rates, go to my site, The Annuity Man, and get my books, because I cover all product types. I talk about how interest rates affect them, how they work. So we'll ship them to you for free in this gold foil mailer. I'll drop them on the floor, producer, and we're going to talk about interest rates because that's important. People all the time call me. They call me in I call it my Chester from the South voice, which is, I'm never going to buy an annuity, Stan, because the interest rates are too low. Okay, Chester, compared to what? Compared to what? I mean, interest rates are low compared to Jimmy Carter years. Absolutely, they're low. But interest rates play a different pricing role depending on the annuity type that you're looking at. Let's just say if you're looking for lifetime income, and a lot of people out there with 10,000 baby boomers reaching retirement age every single day, you know, you're looking for income, you're looking for guarantees. A lot of people are looking to enhance that Social Security payment or add to it. By the way, Social Security is the best inflation annuity on the planet. For all you haters out there, you already own one. But interest rates play a secondary role with lifetime income products. Lifetime income products, single premium immediate annuities, deferred income annuities, qualified longevity annuity contracts, income riders attached to specific deferred annuities. Those are all transfer of risk lifetime income guarantees that are primarily priced on your life expectancy at the time you start the payments. The older you are, the higher the payment. Why? Because you have less life expectancy, which means the payments are fewer, which means the payments are higher. Don't believe me? Think about your decision to take Social Security. Are the payments higher when you're 65 or when you're 70? You're right. I heard you. 70. Why? You're older. So it's the same thing with annuities. Now, in a perfect world, if interest rates were sky high, would they affect pricing? Absolutely, but you can't time it. You know, another Chester voice. Well, Stan, I'm just going to wait till interest rates rise and then buy my lifetime income annuity. That's fine, Chester. But if you're going to do that, and this isn't a sales pitch, so slow down. If you're going to do that, you have to factor in the payments that you missed while you're waiting for interest rates to rise. Bottom line is you're not going to beat the insurance companies. They have the big buildings for a reason. They have the big logos on the tail end of that jet for a reason, is they know when you're going to die, life insurance companies, and they price their products accordingly. You transfer the risk to them to pay you for the rest of your life. There's no ROI, return on investment, until you die. Up until then, it's a pure transfer of risk. I always tell people, I will come to your funeral. You won't know it because you're dead. I will literally sing a cappella, producer, it's true, and I will give the ROI at that time. No one's ever taken me up on that, but that's still out there for people. I will fly in and I will sing. That would just be beautiful. It'd be a tearjerker, producer. Except the problem is I really can't sing. I digress. So let's talk about other interest rates and other types of annuities. So let's just say you wanted to buy a multi-year guarantee annuity. I don't want income, Stan. I just want to protect the principal. I want to hit bunch singles. I want an interest rate that's going to happen every single year. Not sure if I want to peel that interest rate off or just let it grow. Okay, that's a multi-year guarantee annuity. It's the annuity industry version of a CD, and that is 100% interest rate driven, because there's no lifetime income stream. There's no life expectancy calculation. It's the interest rate that you lock in for the specific period of time that you want to lock it in for. That's all interest rates all the time, okay? Indexed annuities and variable annuities, which are a little bit different, people buy them for growth, but indexed annuities are not securities, it's a CD product. The interest rates play a secondary role, not a primary role in the pricing there. So just remember when you start talking about interest rates, and everyone seems to be fixated on interest rates. Everyone wants them to go up. Everyone, whether you like Jimmy Carter or not, you want to see those interest rates that were around when he was. You're not going to. I hate to be the grim annuity reaper. You're not going to see those interest rates. And you say, well, you don't know that, Stan. There's no way. You're an annuity man. You don't know that. I do know that. And the reason I know that is because with all of this money that we've printed recently, if they raise interest rates, what are they doing? They're raising the interest rate payments on themselves, they being the government. There's really no urgency or motivation for them to do that. So I think the rates that we're seeing now are the new normal. And I think that you're at more risk of life expectancy tables changing against you as you are interest rates changing against you, just an FYI. All right, so let's talk a little bit more broadly about interest rates and annuity companies, and not to get in the weeds and not to get into the kind of the actuarial math of it all. And I can a little bit to a point to be dangerous, but I want to talk more of a 30,000 foot view of interest rates. When annuity companies price products and they're using interest rates either as a primary pricing mechanism or a secondary pricing mechanism, understand that they're not statically looking at just the 10-year treasury or just rates right now. They're not. Annuities are commodity products, so it's a competitive world, it's a fluid world where you have to shop all carriers for the highest contractual guarantees for your specific situation. We can do that at theannuityman.com, obviously with our proprietary calculators. With that being said, annuity companies are taking today's interest rates, but they also have a large portfolio of bonds and fixed rate instruments that they've been holding for a while. So they have Jimmy Carter bonds and Barack Obama bonds and Bill Clinton bonds and George Bush bonds. They have some bonds that probably have a higher coupon if they haven't been called yet. And it's just a competitive world. They're not saying, well, if the 10-year treasury is at X, we've got to price our products here. No, they're trying to attract premium. Give an example. When you drive down the street and one bank on one side of the road has a CD at a duration that's higher than the same CD duration for the bank on the other side of the road. Why does that happen? Same CDs, two different banks, why is one higher than the other? Because the one bank is trying to raise premium. They're trying to attract money to their bank. The same thing happens with annuity companies. They're trying to attract premium in based upon their calculations internally, whether it's a life expectancy play, they're looking at the life expectancy tables and the tranches that they need to fill within their portfolio to make sense. And also too, from like a fixed rate standpoint, a multi-year guarantee annuity, they're looking at the markets, they're trying to attract premium. It's not all about current interest rates, so don't get caught up on that. Get caught up on the contractual guarantees and get caught up on shopping all carriers for the highest contractual guarantee for your situation. Obviously, you need to call me to do that for you as well, so we can have a conversation to make sure that you fully understand how these products work and the specific product that you might need. Hey, I did another video on how interest rates affect annuities. You might want to check that out in combination with this one. You're gold. You get it. You understand it. You have one thing left to do, which is go to theannuityman.com and set a phone appointment with moi, with Stan the Annuity Man himself. Yes, I think you're probably thinking, no, I'm going to talk to Junior Stan or Stanette or Stan Yell. No, you're not. You're going to talk with Stan. I like interacting with my clients. All recommendations come through me. 99% of the time, you're going to get me. So when you go to the site, theannuityman.com, there's a place there you can schedule a call. You can access my schedule. We'll have a 30-minute conversation, no pressure, no nonsense, none of that. It's going to be me and you talking as professionals. I'm going to ask you questions, and I'm probably going to put together a customized plan, run the quotes myself, and email them to you, and we get that conversation started to see if annuities specifically fit your situation. They might not, and I'm okay with that, and I'll tell you that if that's the case. But they might, and then we need to look at allocation and proportion. So remember, I do these videos every day, Monday through Friday, so hit the subscribe button. We're doing a lot more extra stuff on the YouTube channel. It's a young channel, we're growing, and I appreciate you adding to that. And with that, I'll see you on the next Stan the Annuity Man video.